Welcome back to Dinar Current. What if I told you that a single decision from Iraq has just turned the tide for its entire economy? That's right, this isn't speculation or rumor. The Central Bank of Iraq has officially introduced the long-awaited $2 dinar rate. It's a game-changing development that's sending ripples across global financial markets and impacting households, companies, and investors both inside Iraq and around the world. In today's update, we'll break down exactly what this shift means, why it's happening now, and how it could reshape Iraq's future, as well as influence the broader global economy. This is a moment you won't want to overlook. Setting the scene, Iraq's economy has faced a tough journey, marked by years of political unrest, fluctuating oil prices, and deep financial uncertainty. At the center of all this has been the Iraqi dinar, a currency that has long struggled under economic pressure. Now, with the central bank's bold move to alter the dinar's exchange rate, many are left asking, what will this mean for ordinary citizens, for local businesses, and for global watchers who have long anticipated a revaluation? What the rate change really means. To put it simply, the dinar exchange rate defines how much the currency is worth compared to others like the US dollar. It influences everything from daily expenses at Baghdad markets to massive international oil contracts. When the central bank adjusts this rate, it sets off a ripple effect across the economy. A reduced rate often means higher inflation. For everyday Iraqis, this translates to an increased cost of living. Food, fuel, medicine, and more could suddenly become less affordable. Let's look at a simple example. Imagine you're running a small cafe in Baghdad, and you import coffee from Brazil. With the dinar now devalued, you'll need more local currency to buy the same amount of beans. That added expense gets passed to your customers, but there's only so much they can afford. Sales drop, businesses struggle, and the cycle of economic strain continues. But there's a strategy behind this. This decision wasn't made carelessly. The central bank is aiming to make Iraq more appealing to foreign investors. A weaker currency can make the market look cheaper and more inviting to outsiders. This could lead to increased investment, new businesses, more job creation, and a stronger economy in the long term. But, and it's a big but, this strategy only works if managed carefully. Mishandling the fallout could cause serious backlash and instability. The human side, remittances and daily life. Millions of Iraqis rely on remittances from family members working abroad. For many, these transfers are a lifeline. But with the dinar's reduced value, foreign currency coming in will now buy less. What once covered a week's worth of groceries might now only stretch a few days. This is a serious concern for families already living on the edge. Looking at the broader impact, experts agree, if the government can guide this transition effectively, with transparency and public engagement, this move could mark the beginning of true economic reform. But if the response is poor or inconsistent, it could make matters worse. And there's more at stake than just Iraq's domestic economy. The international community is watching closely. A successful implementation could boost Iraq's image globally and attract major investment. But if this backfires, it could isolate Iraq and reduce investor confidence even further. Why it matters globally? Why should someone outside Iraq care? Because in today's interconnected world, no economy stands alone. If Iraq stabilizes and boosts oil output, that could lead to lower global oil prices, good news at the gas pump and in the supermarket. But more, instability could push prices higher, affecting the cost of shipping, goods, and food worldwide. Enter Ari, a voice of support in uncertain times. In the middle of all this change stands a key figure, Ari, who is currently in Michigan, working closely with the Middle Eastern community. He's not just trading currency, he's providing much-needed guidance and clarity. Ari understands the emotional toll of financial uncertainty and the high hopes pinned on the dinar's potential rise. For many, Ari has become a trusted voice, a link between the financial system and the people. He's not just doing business, he's helping families prepare, understand, and navigate this transition. When people talk about potential exchange rate updates, the tension is real, and Ari is helping to bring reassurance. It's not just about money, it's about people. At the end of the day, this isn't just a financial headline, it's a deeply personal issue. Families are trying to make ends meet, plan for the future, and hold on to hope amid great uncertainty. That's why understanding currency shifts and exchange rates is so important. So, what can you do? Whether you live in Iraq or anywhere else, stay educated. Follow trustworthy sources. Engage with community leaders like Ari. Ask questions. The more we talk and share, the more informed we become. Final thoughts. The Central Bank of Iraq's decision to lower the dinar rate is bold. It carries risk, but also the potential for tremendous transformation. If handled well, it could usher in a new era of stability and opportunity. But the path ahead is delicate, and the world is watching closely. Thanks for joining today's breakdown. Don't forget to like, comment, and share this video. And make sure you subscribe to Dinar Current for more updates and expert insights. The story is far from over.